Hello, everyone. Happy Tuesday. Today on the Final Bar, we're going to talk about this market from three directions. Top-down macro. We'll talk about the S&P's choppy session, sort of a digestion day after Friday's rally, really the acceleration to the upside going into the long holiday weekend. Where we left after that rally and after today's choppiness. So we'll look at the major averages coming off a bit and focus on the message of broad macro, sector rotation, and individual stocks. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a beautiful sunny day here in Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of technical analysis, using the technical toolkit to better quantify investor behavior, put ourselves in the shoes of all the other investors, and try to make sense of these uncertain markets and uncertain times. Choppy session today. So going into the end of last week, if you tuned in on Thursday, on Friday, we talked about this acceleration to the upside, really Friday moving, the needle pretty high to the recovery side. A lot of encouragement, a lot of optimism, a lot of renewed bullishness coming to the forefront on Friday's session with the rally into the long holiday weekend. Today, a little more choppy, sort of rolling over a bit going into the close, but overall not too bad. We're going to talk about this overall environment as the S&P has bounced up, retraced about 38.2% of the most recent sell-off. We'll see what that means, see what sort of follow through we might want to look for to be a little more optimistic about the prospects for the S&P going forward. But we'll go through all of that here in a few moments. We have great guests on this show. I want to share with you just some of the guests we have coming up on the Final Bar. Tomorrow on Wednesday, we have Dave Landry from davelandry.com. On Thursday, the 2nd, we have Jay Pettit from Charts Avenue coming to us from Southeast Asia in Singapore. Next week on Tuesday, the 7th, we have Larry Tentarelli from Blue Chip Daily. Larry was on our StockCharts draft last month in April. And if you missed that, go to stockchartstv.com. It was really a fun discussion. Larry did a great job. He had the first pick, so you can see what stock he picked along with our other 7 owners. Let's continue on today's show with our market recap. Let's break down the activity in the markets using the power of the StockCharts platform. We look at the S&P 500 down about 2/3% today, down 0.6%. The NASDAQ Composite down 0.4%. And mid caps and small caps both down about 1% for the day. So sort of a digestion day. If you look at the 2-day preview chart of the S&P, you can see Friday's acceleration to the upside, really just pushing onward and ever upward into the weekend. Today opened a little bit lower, traded a little bit higher. At the end of the day, really didn't make any directional progress, to be honest with you. So finished within the range of Friday's session. Looking elsewhere at other asset classes, fixed income markets overall weaker. If you're looking at the treasury markets, the TLT was down over 2%. It's a pretty big haircut for that one. Interest rates jumping higher a little bit with the 30-year above 3%. 10-year yields not quite there, around 284, but bouncing a little bit higher than where they were on Friday's session. Dollar index essentially flat for the day. Commodities, a lot of red on this page. Gold down 1%, silver down about 2.5%. If you look at gold, really pushed to the downside going into the end of the day. Commodities as a whole, a little bit weaker, and energy prices came off with the XLE, the worst performer of the 11 S&P sectors in today's session. Cryptocurrency is a bit of a mixed message, but overall, I would argue a negative more than anything. Ether prices coming off, and actually Ethereum is an interesting chart because bounced up to 2,000, has sort of bumped into that ceiling now a number of times here, currently trading around 1937. Bitcoin, same thing. This one it actually broke above 30,000 over the weekend, now trading above there around 31,600, 31,700. We'll look at those charts here in a few moments if we can make time for it. We're going to get back to sectors and some individual stocks a little later in today's show. So let's look at a daily chart of the S&P 500 and see what we can see. Now we're zooming into the last year here, a little bit over that, just to show the movement through much of 2021, the downtrend that we see in 2022. And again, every time I bring up this daily chart, which is part of my morning coffee routine, I do it every morning. What continues to sort of become very clear is just the difference from 2021 to 2022. Such a different year. I mean, it's so amazing, the blow to new highs at the end of December, accelerating to make a new intraday high the first week of 2022. And that was it. We very quickly start giving back all of those gains and more. And if you look at where we're at now, around 41.32, that's where we were a year ago, right? In late May, we were at these same levels, actually a little bit, just a touch above this, but overall, we're where we were mid-May last year. So in 12 months, we've made no real progress. Now we've gone a lot higher and obviously given back a good amount of those gains, but overall, we're netting out to a zero for the last 12 months on the S&P 500. Now, we talked just a little bit about the Fibonacci relationships. Here's what's happened. If you start the clock at the end of March, you look at that downtrend from late March to mid-May, which is where we bottomed out around 38.10. And that was noteworthy because that was a series of Fibonacci levels, longer term levels, right? 38.2% of the way down from March 20 low to January 2022 high. That's right around that level. So pretty key place and a pretty obvious or a reasonable expectation to get a bounce there. And we've certainly seen that. What's happened since then? Well, now we've retraced 38.2% of the shorter term downtrend. So we had the big push higher for about a 6-week period. We then have 1 week going higher. We've retraced 38.2% of the way. Pretty reasonable that you would get a bit of a pushback off of those levels. And that may be what we're seeing the beginning of today. If you're looking at the 2 days on the S&P 500, you could call this a bearish harami pattern. If you want to dig out your candlestick book and look at those, or look at our chart school on candle patterns, you'll see what that means. It's sort of the inverse of a bearish engulfing pattern, but similar, sort of a bearish signal for the next couple bars. Pretty reasonable coming off of this 38.2% retracement. You know, a lot of overhead resistance. That's the danger to sort of the bull case here. You have the 50-day moving average around 42.70. We have previous resistance at 4,300. We have the 61.8% retracement at 43.20. So if we would continue higher, there's just a lot of potential levels where you'd most likely expect some resistance there. So, you know, not a lot of potential headwinds to further upside there, just from looking at traditional levels of resistance. At the end of the day, it's all about the trend, though. And I would say this bounce off of the lows makes sense. I could see a reversion back to those previous lows, but it's all about the follow through today, stalling out from the acceleration to the upside that we had on Friday's session. I want to look just very quickly with a minute that we have before going to the next segment, looking at a couple of charts. First off, looking at interest rates. So interest rates bounced higher today, which is interesting because the TNX had pulled back to its 50-day moving average. This is really a lot of data here. So let me go back to like the last 3 years. Here we go. So now we can see the move to the upside on $ TNX, gets above 3.1%, pulls back to the 50-day moving average, now bouncing off of there. So this bounce higher on interest rates, the bounce lower on stocks today makes a ton of sense if you look at those relationships and what key levels they're bumping into. What's really interesting about this chart is even though interest rates have come off from about 315 down to 275 and down almost to 2.7%, for the 10-year yield, value stocks really haven't been underperforming that much, just in that little bit. Overall, it's still favoring value over growth. If you look at this trend, this has been just that little blip on this trend that overall has been positive, really not showing any renewed strength in the growth area to overcome the strength that we've seen in some of the value spaces. It's an interesting chart to pay attention to. I also wanted to point out the charts of Bitcoin and Ethereum. Now, they're both bumping up against key levels. For Ether, it's 2,000. And we've talked about big round numbers for Ethereum. For Bitcoin prices, they often gravitate around those big round numbers. So Ether, it's all about, can it get above 2,000 and hold it? Today, actually showing a nice bounce over the weekend, but not getting above that level. Bitcoin actually did get above 30,000. And if you're bullish on this chart, which I think I see the argument for, you have to stay above 30,000, right? That should be the floor in the market in the short term. If that fails, this is not a bullish pattern just yet. Let's continue on to our next segment, sector setups. Talk about this overall environment. S&P with a nice move last week to the upside into the long holiday weekend, giving it back a little bit of Friday's gains today, but overall still holding up pretty well off of those previous lows. Let's look at the 11 S&P sectors and see how they are performing relative to one another. The best way I have found to visualize that is using Julius de Kempener's relative rotation graph, the RRG function on StockCharts. If you've not used this before, go to Charts and Tools. You'll see the relative rotation graphs, a beautifully done visualization that shows you the 11 S&P sectors and how they rotate around the zero line. On Friday, by the way, we talked about some of the other tools you can use to break down rotation, to break down chart lists. So if you missed that, go back to our YouTube channel or stockchartstv.com to watch Friday's episode, which hit on some other ways to think about sector movements. When we're looking at the 11 S&P sectors using weekly data, which is the main way that I would encourage you to start with, even if you're a short-term trader, start big and go small, right? Start macro and go micro. You want to start with the overall forest and then get into some individual trees and what you think about those particular themes or particular positions. When we look at the 11 sectors, we can see by far the outlier is the energy sector, right? Furthest to the right in the last week, chopping around a bit actually, but had been rotating more toward the weakening quadrant, turning and now bouncing higher. This is as stocks like DVN and COP and CVX and others had a pretty good bounce, a bit of a distribution in the short term, which we'll talk about here in a few moments. But overall, some interesting rotations in the energy space, netting out to a fairly positive trend. Then further to the left, so if we start on the farthest right and then look to the left, this is in order the strongest sectors on a relative basis, looking at a longer term time frame. After that, we have the XLU, the utility sector, followed by consumer staples, XLP, and then we have healthcare and materials. So out of the 11, those are the 5 showing the strongest trends on a relative basis, right? Using the relative strength characteristics of those sectors versus the spiders, right? Versus the S&P 500 as a benchmark. And if you rewind the clock a little bit using the little button here, you can see how the energy sector had been much stronger, off the viewable area there for a little bit, but coming off and continue to be farthest to the right. Utilities has been stronger and stronger, but as we go into the last couple of weeks, you can see that the momentum is coming off. So further to the right, still strong. The fact that it's going down and not up just tells you the momentum is weakening instead of the momentum strengthening. So in general, you want to see things like the consumer staples sector moving toward the right further, moving northeast, which means stronger relative trend and stronger momentum. So after energy, consumer staples arguably showing the most improvement here in the last couple of weeks, really setting up in a position of strength. The growthy stuff, the offense, traditional offense, as you think about it in terms of growth-oriented sectors, really in the lagging quadrant, and then one in the improving quadrant, the XLC communication services. Technology, consumer discretionary, along with financials are the 3 sectors that are in the lagging quadrant right now. Now let's look at the 11 S&P sectors using the candle glance function. And this is actually what we spent some time talking about on Friday, looking at the candle glance function and different ways to manipulate that list of charts and come up with different ways to sort them and order them and bringing in different technical indicators. Now, when you're looking at these 12 charts, you have the 11 sectors, then the spiders, the S&P 500 in the bottom right. Which one of these stand out as being particularly strong? Which ones of these stand out as being particularly weak? As you're glancing around them, a couple things to think about, right? Have any of them recently made a new 52-week high or a new 52-week low? That's often a good place to start. How many of them are showing the moving averages both sloping upwards with the price at the top? How many of them are going downwards with the 2 moving averages sloping downwards and the price at the bottom? What's in that bullish camp just to start with, right? In an uptrend, making higher highs or recently making a new 52-week high above 2 upward sloping moving averages. Not many at this point, and there are 2 in particular that I would highlight for you. Energy, number 1, which we mentioned on the RRG, by far the outlier. And I think looking at these 12 charts, which of these charts has been the strongest over the last year? I don't think it's even close. The fact that energy is the strongest, but it's close second place would most likely be utilities, right? Above 2 upward sloping moving averages. So those are the 2 that are in sort of that traditional bullish configuration, recently back above the 50-day. I like that, potentially putting in a lower high here, which is not ideal. You compare the chart of energy making a new high into the end of the month of May, utilities making a lower high. So right, one clearly outpacing the other. But overall, compared to the other 9 sectors, those 2 are, I would argue, clearly the outliers in terms of showing renewed strength. which are the ones that are clearly in a downtrend. Something like communication services has been our go-to example of that, in a downtrend, making lower lows and below two downward sloping moving averages, right? So the bullish example, probably energy, the bearish outlier, probably communication services. And that's been the case for most of 2022, right? What's interesting about this kind of approach, go back to January, and you could argue that in the month of January, energy differentiating itself by making new highs while other things are starting to pull back. Communication services differentiating itself by making new lows, right? And being in a clear downtrend. And look at how those trends have persisted. Being long energy and short comm services has been a pretty decent trade for the last 5 months. That's why we focus on trend, where these sectors have come from, and start to make some assumptions about where they might go next. Now, this could be an interesting one. What else still remains below two downward sloping moving averages? Starting at the top, I see consumer discretionary. That would fit that criteria. I see financials, which are getting close to the 50-day, but not there yet. I'm seeing industrials fit that criteria. I'm seeing technology fit that bearish criteria, and technically real estate as well, which is a bit of a surprise to me. There have been times when utilities and real estate have looked pretty similar, particularly in March, early April. You saw them both accelerating to the upside. But look at how utilities have held up a lot better than REITs. That's reflected on the RRG. That's reflected on the individual charts as well. So looking at these 12 charts, it seems clear which charts are working, which charts are not. The SPYs look a lot like communication services. They probably look most closely like consumer discretionary or maybe technology. That's what the SPY looks most closely aligned with, which shows you why energy, why utilities, those stocks that are above their moving averages, consumer staples, shows you how much of a better technical position they are in than the broader benchmarks here in late May. We need to take a quick commercial break. We'll be back with our next segment, Shifting Stocks. We'll see you in a minute. Hey, everyone. Welcome back to the Final Bar. It's good to be back with you after the long holiday weekend. Hope you enjoyed your Memorial Day. We're having fun here in Redmond, Washington, getting construction going on our new StockCharts TV studio. So hopefully very soon, it'll be a little bit of time before we can get everything up and running. But in the near future, in the next couple months, we'll start bringing you some really cool programming from a fantastic, beautiful new set as we continue through the construction process. We're going to give you a couple announcements before we get to our next segment. First off, we welcome your questions, right? We're here to answer your questions on the financial markets, on technical indicators, on the StockCharts platform, on market history, market dynamics, whatever it is. We're here to help you. Our email is the best way to get your questions in front of us, thefinalbar@stockcharts.com. We featured many of your questions on the air, and we'd love to feature one of yours in our next mailbag. Also, by the way, on Twitter, you can ping us there at Final Bar SCTV, or on YouTube, just put a comment below the video you're watching on our StockCharts YouTube channel. And again, we'll do a mailbag segment at the end of this week on Friday, and we'd love to feature one of your questions on the air. Also, go to StockChartsTV.com. We have so much great content every week from fantastic presenters. Larry Williams is actually recording a market outlook for us this week, which will air in the next day or two. And also our special events like our mid-year market outlook coming up in the next month or two. We also have a lot of great content from earlier this year, big picture thinking about market dynamics, how to think about the Fed, and all of the technical inputs you should be paying attention to. Go to StockChartsTV.com, or on your mobile device, just search for StockCharts TV on demand. I want to move on to our next segment, Shifting Stocks. This is our normal Monday routine here that we're using today on a Tuesday, where we start macro. We talk about the big picture. We then go sectors, focus on some of the sector themes. Then we go through some individual stocks and focus on some of the charts that are noteworthy. Now, Amazon has had a nice bounce today, so let's hit on some of these charts that are having some interesting movements. Amazon, the best performer out of the 6 FanMag stocks. That's the sort of 6 mega cap tech, consumer discretionary communication services names, sort of the FANG plus Microsoft group of 6. And you can see Amazon bouncing to the upside. Now, The bull case for stocks, I would argue, has to include the FANG stocks, right? Because we've seen what happens when energy is working, when some of the cyclical sectors like materials are working, and when tech and consumer and communications names are struggling, the market goes down, right? The indexes go down. Now, it's not to say that all stocks go down. And 2022, if it's taught you nothing about investing, hopefully you've learned a lot from this experience. And the markets can be humbling, but I hope what you've learned is whether or not the market goes up or down, individual names and individual sectors, individual themes can very much differentiate themselves. So in a year when the S&P has been, last 12 months where the S&P has essentially been flat, year to date where the S&P has been struggling, you look at something like energy, which has been outperforming by 40, 50, 60% at times. Those are real numbers. Those are big numbers. And again, it's not a surprise. There's a trend that evolves over days and weeks and months. You're not missing it if you miss out on a one-day move. Focus on the trends, keep layering into things that are working, laying away from things that are not. So long-winded intro to say on the chart of Amazon, I would argue the bull case for the major indexes, the S&P and the NASDAQ, would have to see the FANG stocks doing better than they have been, right? Overall, the indexes are following the FANG sectors and the FANG stocks. If they're struggling, the markets have very little hope of doing well. Amazon, noteworthy that it's getting above 2,300, closed right at 2,300 on Friday, which is what put it on our radar of potential breakouts to the upside. Today, a nice follow through to the upside with Amazon getting up to 2,400. Now, there was news related to a stock split for Amazon, and that's certainly causing some upside potential there. Came off a bit toward the end of the day, but overall, pretty strong. I would argue the bull case for the markets would have to include Amazon remaining above 2,300, which is why this is such an important chart, probably to watch it this week to see if you do get that follow through or if it starts to stall out. I think that could tell us a lot about the potential movement. The best gainer in the S&P, and this is sort of neck and neck with Amazon going to the close, is actually a material stock. It's Mosaic. Now, if you look at the chart of Mosaic, overall, is this a broken chart? Not really. Overall, if I had to label this bullish or bearish and I had a binary choice, would I label this bullish or bearish? Probably bullish, right? And certainly relative to other sectors or other stocks and other charts out there, absolutely. But when I'm looking at the chart of Mosaic, you're sort of seeing that's not what I meant to do. If I'm looking at this line here, I just wanted to get a horizontal line here. Look at these lows here, right? So you had this pullback in mid-March. We then made new highs. We then had this pullback in early May, tested it again in mid-May, sort of that 55, 57 range. Has been a nice level of support. That it really was established back here in March, now confirmed a number of times in the month of May. As long as Mosaic holds those lows, holds that support level, not a bad chart. If it gets above the 50-day moving average, gets above resistance from mid-May here, which would mean a close above 66, 67, we'll call it, this all of a sudden becomes a fairly attractive chart, which is a nice run higher, a pullback, a bouncing off of support, and then a rotate to a new swing high. However, here's the downside, right? And if this chart breaks below, let's call it a close below 55, that would make it a new low for 2022. All of a sudden, this chart goes from looking like it's starting to establish a short-term low to instead failing to hold support and breaking to a new swing low. So charts like Amazon and Mosaic can be really informative to watch during a week like this, just to see if the recovery materializes. Do charts like this make a new swing high and get above their 50-day moving average? Or do charts like this fail to hold support and break to new swing lows? I think that will tell you a lot about the next leg or the future path of the major averages, because it's names like this, if they're able to recover or not. Amazon breaking above support today. The question is, does it follow through? Mosaic not quite making it to support, and that would be something I might be looking for. Now, the energy sector, one of the worst performing materials, actually came down at the end of the day and took it over from energy there going into the close. But if you look at some of the energy stocks, you can see they have some concerning moves on here. Looking at the candle, I have a chart style called Candle Focus, which just allows me to bring up a quick candle chart and look at what's happening here. Now, if you know your candle patterns, some of these might jump off of the page at you, but if not, I'll help you out here. This is actually called what is this called? Now I'm testing my own memory. A dark cloud cover, this is called. We have a big up day, a big down day, and day two actually gets at least 50% of the way down through the first day's candle. If you know a bullish piercing line, it's sort of like this flipped over. That's something you would see at a low. This is actually called a dark cloud cover. And if you can assume what is meant by that loose translation of the name in Japanese, dark cloud cover, sort of an ominous sign. It basically tells you that you had accumulation on day one, you have distribution on day two, and it really starts to materialize in terms of really making negative progress through the trading range on Friday. It's actually a negative pattern. Now, some of the names in the energy sector, we're looking at SLB here. Schlumberger actually made a bearish engulfing pattern. So it's sort of like the dark cloud cover that makes it all the way below the first day's open. That's probably a familiar pattern to many of you called a bearish engulfing pattern, which was a big up day, a big down day. The real body of day two engulfs the real body of day one. Now, what that tells you is both of those patterns are short-term negative patterns. It tells you most likely the next couple bars, the next couple candles are more likely to be lower than higher. Now, there's a natural stop built into this pattern. And what it is basically you get above the high of the pattern. So we get above the high from today, which is around 48.60, 48.70. That would negate the bearish pattern and indicate a nice recovery. But overall, these are some negative signs that I'm seeing appear on the energy charts for today. That's one of the things that tells me when I'm looking at the chart of the S&P 500, I'm wondering if this is a bear market rally where it stalls out. The bearish engulfing patterns I'm seeing make me feel like we might be hitting that here pretty soon. But what's interesting is you're seeing it on energy. You're not seeing it on some of the technology names and others that tend to lead the market to the downside. Energy has obviously been holding up just fine while the markets are going lower. But one of the sort of macro themes that we've been talking about on the show, and a number of my guests have brought up, is it's hard to be that negative when something like energy is just continuing to perform so well over the long term, right? The bear case for stocks, I would argue the real bear case is energy stops going higher. Some of those sectors that have been working really start to not work. And it's less about rotating away from the FANG stocks into energy stocks. It's rotating out of equities altogether. That's what we've not necessarily seen yet. But some of these short-term negative candle patterns on the energy stocks are causing me to think maybe this week is a week where we get a little further distribution. We need to wrap the show and go to the 3 and 3. Let's break down 3 charts in 3 minutes that tell the story of this market environment, starting with the chart of the S&P 500 and our market recap. And just there at the end of our segment on shifting stocks, we talked about this daily chart of the S&P 500. It is a masterclass on Fibonacci retracements. So if you're not familiar with Fibonacci levels, this is a really important time. Sometimes it's not super helpful when the market's just in a consistent uptrend like May, June of last year. Fibonacci retracements, not super helpful for the market because we just keep making higher highs and higher lows. The game is fairly straightforward. Now we're retracing some of the gains that we made in 2021. Fibonacci retracements are incredibly valuable. It helped us focus on a potential area of support around 4,200 in the first quarter, which played out beautifully. We're now bouncing off of the 61.8% retracement using September 20 to January 22. Also a major 38.2% retracement looking at the longer trend from the March 2020 lows. Long story short, a bounce makes sense. Also, a bounce up to the 38.2% retracement level makes sense as well. I think we're right at a potential area of resistance here. It's an important chart to watch to see if we get that follow through. We did not get the follow through today, which may be a telling indicator. Chart number 2, looking at the financial sector. We talked about the 11 S&P sectors. We keyed in on a couple of them. I didn't talk a lot about financials, but I think the XLF could be at an interesting turning point as well. We've highlighted at times so far this year things like insurance names, right? Even though the major banks have been struggling overall, some of the insurance names like Progressive and Allstate and others have had some pretty decent runs at times during the year. The XLF now has rallied up to a potential area of resistance. If you look at the support through some of last year and certainly in March of this year, we broke down through there in April, retested those levels from below. Now we're rallying once again and coming up to that level of resistance. Also lines up with the 50-day moving average. So the bull case for financials would have to include blowing through some major league overhead resistance, which is why I think that might be an important chart to watch as well. Finally, we talked about some individual names on the move in our shifting stocks segment. I highlighted some of the distributive patterns that I'm seeing in the short term in the energy sector. SLB with what's called a bearish engulfing pattern. We highlighted a dark cloud cover pattern as well. This indicates short-term distribution, a period of accumulation on Friday. Distribution today suggests short-term weakness going through the remainder of this week. Could be some key charts to watch in a leading sector of the markets, energy. Folks, that's our show for today. I want to thank you so much for joining us every weekday after the close for the Final Bar. All of our previous episodes and our great interviews or at stockchartstv.com. For stockcharts.com in a sunny Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.